When most people think about investing in Europe, they think of countries like Germany, France, or the United Kingdom. But what about the parts of Europe that aren't fully integrated into the global financial system? Countries like Serbia, a country with a growing economy, a strategic location, and increasing ties to both East and West. So the question is Serbia an overlooked opportunity or a market that still isn't fully investable? Serbia sits in the Balkans, at the crossroads of Eastern and Western Europe. It borders both European Union countries and non-EU economies. This positioning makes it a transit hub, a trade connector, and a regionally important economy. Serbia's largest trade relationships are centered on Germany, China, Italy, Hungary, Bosnia and Herzegovina, and Romania. Serbia isn't a core European market, but it's not disconnected either. Serbia's economy is diversified. Serbia manufactures and exports a mix of automotive components, tires, wiring harnesses, wipers, hoses, metal components, machinery, base metals, furniture, food products, chemicals, clothing, pharmaceuticals, and some passenger car production and components. Serbia's main crops are maize and corn, wheat, sunflower, soybeans, and sugar beet, with vegetables and forage crops also important. On the fruit side, Serbia is especially known for raspberries, apples, plums, cherries, and grapes. Serbia provides information and technology services such as software development, outsourced IT work, digital solutions, AI-related infrastructure, and related engineering talent. Serbia also has a formal business services ecosystem built around shared service centers, business process outsourcing, information technology outsourcing, and R&D services, and increasing foreign investment. Serbia's cumulative FDI inflow between 2008 and 2023 was approximately $52.2 billion. In 2024, FDI inflows were at about approximately $5.6 billion. The current government of Serbia, led by Alexander Vučić, has worked to stabilize its economy by emphasizing a prudent fiscal management policy with IMF-backed deficit targets and special fiscal rules for wages and pensions. The National Bank of Serbia implemented restrictive monetary policies to keep disinflation on track. The government structurally reformed tax administration, public financial management, public investment transparency, banking supervision, and energy sector reforms policies. Lastly, the government included subsidies and incentives in industrial development efforts to attract FDI and integrate more closely with European markets by signing and implementing a stabilization and association agreement with the EU. Serbia's growth story isn't explosive, but it's steady and deliberate. Serbia does have a functioning stock exchange, the Belgrade Stock Exchange. The exchange is home to approximately 340 listed companies. Liquidity is limited. In December 2025, the total turnover was approximately $62 million, almost entirely bonds. Global participation is still relatively low. The market exists, but it's still in a developing stage compared to Western Europe. Serbia's opportunity lies in its geographic position, its role as a regional connector, its ongoing economic reforms. It's also a candidate for future EU integration. Serbia has been an EU candidate since March of 2012 and has been in accession negotiations since January 2014. As mentioned previously, Serbia signed and implemented the Stabilization and Association Agreement with the EU. In May 2025, Serbia joined the SEPA geographical scope, with Serbian payment providers entering operational readiness. Lastly, they are continuing implementing the CEFTA Common Regional Market Decisions and working towards WTO-related alignment in some remaining areas. Why hasn't Serbia's accession to the EU happened? The pace depends heavily on rule of law reforms, democratic institutions, anti-corruption performance, media freedom, and normalization of relations with Kosovo. The EU's own 2025 report also flags limited political will, deep polarization, and problems with foreign policy alignment, especially regarding relations with Russia since the war in Ukraine began. Serbia isn't trying to become a global financial hub. It's trying to become a stable, integrated European economy. While Serbia has taken steps toward fiscal stability, economic reform, and foreign investment incentives, issues linger. Serbia is facing democratic backsliding and concentration of political power. The EU's 2025 report says that Parliament's oversight function is weak, political debate is limited, civil society faces a harder environment, media faces political and economic pressure, and anti-corruption actions raise concerns about prosecutorial autonomy. Reuters also reported that judicial changes were criticized for centralizing power and tightening the president's grip over institutions. The EU alignment is still ongoing, and there is no estimated timeline on full alignment. Serbia is moving toward integration, but it's not there yet. Serbia's national currency is the Serbian dinar. The Serbian dinar has remained remarkably stable and even somewhat stronger versus the dollar over the past 10 years. Compared to many frontier markets, the country is more stable, but still not a major global currency. Currency risk exists, but it's less volatile than many frontier economies. Serbia's challenge isn't instability, it's scale and access. Since we talked about the Belgrade Stock Exchange, how can an American get access to the Serbian stock market? Right now, there are no pure-play ETFs that invest in Serbia. The Global X Emerging Markets Bond ETF disclosed a position of less than 1% in Serbian international bonds. For anyone wanting to invest in stocks on the Belgrade Stock Exchange, foreign investors can trade without limitations through local broker-dealer members. The process generally involves signing with a local broker, opening a special cash account and a securities account. Serbia isn't closed off, but it's not easily accessible either. Serbia sits in a unique position. It's part of Europe, but not fully integrated into Europe's financial system. It has growth, but not scale, and it has potential, but limited access. The question isn't whether Serbia is developing. It's whether that development translates into something investors can actually participate in. If you're interested in deeper analysis on frontier and emerging markets most investors overlook, consider subscribing. This is Frontier Market Intelligence.